What's up, everyone? It's Scotty with Money Investing, and big tech here with a massive rally and also driving the markets higher with the Nasdaq very much green today, up over 1.79%. I've got the S&P 500 up a little bit over 1.4%, back over 4,000, and the Dow Jones rallying over 323 points, or up a little bit over 1% on the day. 10-year yields were just a little bit shy of 3.6%, volatility dropping, and oil prices also rolling back down. So we do have a very important numbers coming out tomorrow. So GDP numbers, jobless claims, and the Fed's balance sheet is due for tomorrow. We're going to talk about that in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time, and the link to our Discord and Patreon is going to be down below. We'd love to have you on board. There is a 16% annual discount that does expire in the next 2 days. So again, if you want to take advantage of that till March 31st with limited spots, link's going to be down below. So this right here was the state of the market, very much green. So we gapped up, we came down a little bit in the next hour or so, and then we rallied right through 11,900 and almost trading as much as 12,000 points on the Nasdaq, and the S&P, of course, trading past 4,000 points. If you come over and take a look at some of the stocks that were green, so big tech obviously rallying and driving this move to the upside with Amazon up 3%, Netflix 2.6%, Tesla was up 2.5%, Meta pushing up 2.3%, Nvidia continues to charge higher. We got Apple here up another 2% to 160, and Microsoft, AMD, and Google all were green. All sectors were green today, and we had a very strong, of course, bullish momentum on the upside. So big tech shares also rose. Meta and Netflix added more than 2%. Apple closed nearly 2% higher. Amazon jumped more than 3%. Micron, despite the somewhat dicey earnings, it ended up climbing over 7%. And we also did have Nvidia climb 2%, while AMD also adding 1.6%. Banking stocks were recovering really well, and the benchmark 10-year Treasury yield inched to up 3.57% as the markets closed, and the short-term 2-year rate climbed to as much as 4% on the day. So Ed Yardeni from Yardeni Research, he says, and I quote, "Every day that something doesn't break is a good day." And the market keeps waiting for something else to break, but Silicon Valley Bank was that something. And he also mentioned that he sees the S&P 500 can rally double digits to the end of the year at 4,600. That's what he's suggesting the markets have the potential to do in 2023. And he pretty much says, and I quote, "The banking crisis is going to be very well contained by both the Fed and the FDIC. And at the same time, I think it's going to keep the Fed from raising interest rates even further." And the Federal Reserve last week took the benchmark rate to 4.75 to 5%, while signaling in more rate hikes coming this year. Yardeni said he doesn't think the Fed will cut rates this year. Now, this is a really important point. Yardeni says he doesn't think the Fed will cut rates this year. I also don't think the Fed will cut rates this year, but the market does. The market is pricing that in. So that discrepancy with So in other words, if the Federal Reserve does not cut rates and the market's thinking about rate cuts, and that's what the market's pricing in, doesn't that lead to some disappointment though? Like, doesn't that lead to the market's narrative changing and what the market's looking forward to in terms of the Federal Reserve? And he goes on by finally saying, and I quote, "I think they are currently now in a restrictive enough level where they don't have to keep raising interest rates." But, really it just comes down to what the market's expectations are from the Federal Reserve moving forward. And, there was a very specific principle in Ray Dalio's, video on YouTube from Changing World Order. And I think it's also in part of his book, Changing World Order, which I'll go over in just a minute. But again, markets expectations are really important. If markets pricing in rate cuts and we don't get rate cuts, that's a bit of a disappointment for the market itself, right? And if we start to see more and more cracks in the economy with higher interest rates because they're paused at a restricted level for longer, that of course can drive some lower spend, lower earnings, and thereby lower PE multiples on the S&P and the Nasdaq as well. Now this right here is what's coming up tomorrow. So we got GDP numbers and the jobless claims scheduled at 8:30 a.m. Eastern. We've got the Fed's balance sheet at 4:30 p.m. Eastern. That's also going to be very important. And then Susan Collins and Thomas Barkin are both talking tomorrow at around 12:45 p.m. And then on Friday, of course, we got the PCE numbers, which is going to be the Fed's preferred measure of inflation, the core PCE, and not to mention the consumer sentiment also comes out. So GDP expectations pegged at 2.7% for the fourth quarter 2022. This is the third and the final revision, final estimate for fourth quarter 22. And jobless claims are pegged at around 195,000 for tomorrow. And this is the principle that Ray Dalio mentioned in his book and in his video, Changing the World Order. And this is one of the first principles that he talks about is when central banks print a lot of money, buy stocks, gold, and commodities, right? And that's what it is, right? That's why you get a lot of money supply, right? If you have a lot of dollars in circulation, a lot of people buy financial assets that drive prices back higher for a lot of these assets, right? That's equities, gold, commodities, real estate. I mean, you can, the list goes on and on. But when central banks print a lot of money, that's the time to be buying stocks, gold, and commodities. That's the principle straight from Ray Dalio. That's very true and applies all the time. Every time you see two charts of the S&P 500 combined with the actual money supply or the Fed's balance sheet total assets, they both move in the same direction, right? They've got a positive correlation where if one happens, the other one also goes up. So that's the environment that unfortunately we are kind of heading into, it seems like, because of all the banking crisis, because of all, other banks kind of also failing. We are starting to see a bit of a switch from the Federal Reserve where they are not looking at raising interest rates by too much anymore, but instead additional firming is needed and then pausing at those rate hikes and then potentially even starting to flip back over to cut rates as the market's pricing in, and then also printing more money to allow for the banks to borrow to solve this liquidity crisis. Again, we're going to find out more how much the Fed's balance sheet is ballooned. We already know in the last 2 weeks alone, they've increased their balance sheet by $400 billion. And the last entire year worth of QE or QT, should say, rolling off their securities, US Treasuries and mortgage-backed securities, has been unwounded in just 2 weeks, right? Not all of it, but 6 months worth of it has been completely gone in just 2 weeks. $400 billion being printed. So again, we're seeing that kind of play out as the markets also start to push right back up. So you can see that almost every stock, every sector was pushing higher. So Amazon, Nvidia, Micron, of course, Microsoft, Apple, Tesla, everything pushing higher with the exception of some healthcare names. So healthcare was slightly lower. UNH, Eli Lilly, Merck, AbbVie, Johnson & Johnson was slightly higher, but energy pushing up, real estate was up, financials were up, utilities, materials, cyclicals, comm services, technology, defensive, you name it, all sectors pushing higher in the S&P 500. So all 11 were green over the last 1 week. All 11 are still green. And over the last 1 month, we've got comm services, technology, and utilities, the best performing sectors. Orange juice for the win, up almost 4% with platinum and volatility here pushing higher as well. And we got lean hogs, soybean, natural gas, lumber prices, and coffee pulling back on the day with Bitcoin back over 28,000, very strong day. And Ethereum also trading as high as $1,800, almost at $1,800 on the day. So volatility coming right back down, a little bit over 4% sell-off here, coming down to 19 levels here. And crude oil also getting a bit of a rejection at close to $73, $74 a barrel. So this is going to stay put as a very important area of resistance for crude. And Bitcoin, of course, now starting to break past 28,000. We do have certain levels to watch for Bitcoin as well, all the way up to as much as 35,000. So 32,300 to be more precise is going to be that next resistance level and that next target to watch for BTC. If and when we get up to that level, that's going to be that next resistance. For Ethereum, just a little bit over 17, almost 1,800. Next level is going to be at $2,000. That's going to be that next target to watch for Ethereum moving forward. Now, talking about the markets and S&P 500 on a very strong green candle pushing higher, and the next target and the next resistance really is going to be at 4,100 to as much as 4,200. So inside this sort of red rectangle. And again, if you guys go back a few weeks, we talked about how the markets were hitting that resistance back in February. We were overbought here. Lots of stocks were overbought. And then we saw a 9% pullback on the S&P, a very, very normal pullback. And now, once again, we're starting to push right back up. So we're heading into that resistance area at 41 to 4,200. That's going to be the level to pay attention to inside this red rectangle. Talking about the NASDAQ here, a very similar trajectory. So we are getting up to almost 12,280. So this right here is going to be that resistance. This one, to be more precise, is that level where exactly we got rejected at. And then, of course, the NASDAQ sold off, I think, close to 10% here. Yep, so over 10% sold off here between that period. And now we're starting to bounce right back up and seeing a lot of momentum come through, and that is going to be that next resistance at 12,280 points on the Nasdaq. I also did a video earlier today talking about, excess savings and talking about consumer spending and tying that into earnings and what that might look like, later this year. And, when the markets are green like today, they are 1.7%, 2%, lots of individual stocks are just rallying 2, 3, 4, 5%. Yes, I get it. It becomes a little bit more difficult to put those pieces together on what the economy might look like 6 months from now, 12 months from now, what inflation might look like 6 months or 12 months from now, what the Federal Reserve is going to do with interest rates, because we get a little too fixated, because I've had that issue with myself, is that, I would get too fixated on the daily gains and not really look at the big picture or zoom out and look at the big picture. And that, I think, at the end of the day is what really matters. Valuations matter, fundamentals matter, macros do matter for the markets, and not just the intraday momentum, whether we're going higher or lower. That's great. Portfolio's up, everybody's having fun, but we have to keep a close eye on all of it, right? Everything from a holistic standpoint. That's why we cover fundamentals, macros, and technicals, everything together, to have a really good understanding on where the markets are potentially headed, considering everything that we know from an economic and fundamental standpoint. So 12,280 is going to be that resistance for now from a technical standpoint. But again, we got to keep a close eye on earnings that are going to be starting out at the end of April for a lot of these companies and how they're shaking out for the end of this year for 2023. Talking about Apple with a massive continuation on this breakout and pushing up close to 2%, back over $160, continues to play out in this negative divergence. But the next target and that resistance is going to be all the way up to 177. So this right here is going to be that level to watch for Apple moving forward. Support level is going to stay put at 157, close to $158 per share for the company. Talking about Amazon also with a very nice green day, up over 3%. Still in the context of this downtrend, I would say. So still very much making lower highs and lower lows. And we got a resistance staying put at roughly around $106, $107. So this right here is going to be that level, which we eventually need to break out of. And then we're going to be worrying about 115, this level right here. And support level is going to stay put at roughly around $81, $82 per share for Amazon. Talking about Tesla, the big winner, up a little bit over 2.4%, but still doesn't quite feel like a green day for Tesla, right? These are very, very small green days after 4 or 5 red candles here. So yes, Tesla's stock price was up, but didn't really feel like a proper green day, because Tesla, when it goes up hard, right? We're talking 6, 7, 8%. And still green, not complaining. So resistance going to stay up at roughly around $200. We have gotten rejected at those levels a couple times. My fair value is going to stay pegged at roughly around 124, 130 levels for Tesla. So those are going to be some levels to pay attention to for this company. Talking about NVIDIA continues to charge higher once again. We get some small blips of these pullbacks. So NVIDIA at one point was down over 5.5%, close to 6%, and then rallied just right back up. The momentum's super strong. The AI buzz is very, very compelling. And 292 is going to be that next resistance to watch for NVIDIA. So this is going to be that next level to pay attention to for NVIDIA. And I could see NVIDIA getting up to that level, no doubt. I mean, RSI, MACD is still getting overbought. That has been true for NVIDIA for a long time, but I don't see it, substantially pulling back unless, of course, the entire market starts to pull back altogether. But resistance and next target is going to stay up at $292. Talking about advanced micro devices, and AMD here starting to pull back from highs of $102, $103. So we did see a decent sized pullback for AMD, but on the day pushing right back up. Still a very, very much a doji candle, so lots of indecision, not really going higher or lower, but instead just going sideways intraday and closing in at just over $96 per share. I do have covered calls on AMD, as I mentioned earlier in my previous videos. Those are up close to 30-40%. So if AMD continues to drop further, I will be looking at closing those calls out for a decent profit. Next up, we're going to talk about PayPal, and PayPal on the day was up over 2%, so seeing some momentum back over $74. Resistance is going to stay put at these lower highs, so this is going to be that level to watch for PayPal, and support level is going to stay put roughly at around $67, $68. So this right here is going to be some levels to watch. Of course, we're still in the context of a descending triangle. My fair value stays put at roughly around $70 per share. And right now it continues to kind of drift lower and lower, making lower highs and lower lows. Square, on the other hand, with a very, very nice move and starting to fill that gap more and more. And from those lows of $59 per share, it's already rallied a little bit over 12%. This is still the remaining gap that Square has after the short report from Hindenburg. And of course, we got a resistance all the way up to $83, $89. So that right there is going to be that resistance level to watch for Square moving forward. Support level is going to stay pegged at 59 to as low as $51 per share. Talking about Meta platforms, and Meta here with a very nice gain at 2.33%, back over $205. And the next resistance all going to be all the way up to $222. This is the next target. This is the next resistance to watch for Meta moving forward. And the support level is going to get validated at 198. So yesterday we got a perfect validation at $197, $198. So this right here is going to stay put as a very strong level of support for Meta, with the next target at 222 for this company. Talking about Netflix, and Netflix here on the day was also green very much, pushing right back up. And my target, of course, is all the way up to $380. That's going to be that red rectangle. That's the next resistance for us to watch for Netflix. That's going to be in line with this previous level that we have talked about in our previous videos. And of course, we're seeing a lot of momentum back up from the R side, the MACD, as it was very oversold. So a lot of potential for Netflix to continue on this rally back up. Next up, we've got Google. And Google here continues to see a bit of a weakness, so underperformance from Google on the day. Still validating that support though at $101, $102 per share. So that is going to be that support level to watch for Google, and resistance is going to stay put at 108, 109. Do like Google a lot. No doubt that it is one of the best quality companies to own for the longer term. However, the fair value is going to be closer to, I believe, low 90s to high 80s for Google as well. Lots of consolidation sideways in that range for this company. So support level is going to stay put at roughly around 101, resistance at 108, 109 for this stock. Talking about Microsoft, and Microsoft here on the day continues to charge higher, also up almost 2%. So again, you're seeing a lot of big tech concentration with a lot of these names pushing up 1.5 to 3%, driving the NASDAQ, driving the markets altogether higher. And Microsoft's got a resistance all the way up to 292 to as much as $300. So this right here is going to be that level to watch for Microsoft. A very, very nice move to the upside for the RSI and the MACD. And like I said, that is going to be that next resistance to watch for Microsoft. Fair value for me sits down at $230. So if and when it drops 50 points, I will be very much interested in taking advantage and dollar cost averaging a lot of Microsoft. And last but not least, we got Shopify for now. Shopify here up another 5%, continues to charge higher. Very nice move, continues to kind of skirt alongside this higher low line, ascending support line. And this is going to be that gap that it needs to eventually fill in, which we're getting closer and closer to filling. And the next resistance is going to be at $54, $55 for Shopify moving forward. So hope you guys enjoyed this video. Bottom line is the markets are very much in this optimism and pushing higher on the back of expected rate cuts, expected QE, and of course a lot of central banks now starting to flip their script with respect to printing more money, which obviously is going to be very beneficial to financial assets, including stocks and gold and commodities and even real estate, as mentioned in Ray Dalio's principles of of the economy and how the world works and changing world order. So I hope you guys enjoyed. And again, I'm gonna once again be the person to recalibrate our expectations. And even though markets are pushing higher, don't let your emotions kind of FOMO you into certain stocks, because at the end of the day, valuations, fundamentals, and macros are what really matters, along with technicals, of course. But the real question that you need to be asking is, the stock that you are buying or trading, is it actually worth buying at those prices? Not because it's actually going up. Okay. So, and that's the same thing on the other way around, right? Just because you're selling a stock, you have to ask yourself, does it make sense to be selling that stock at that price? Not because it's selling off that I need to get rid of that position, right? Because those are more fear and greed driven decisions, as opposed to more logical and rational, fundamental driven decisions. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the 16% annual discount is available till the end of this month. So always happy investing, and I'll see you all in the next video.